Well, this week we will see a flurry of economic news. My next guest says we are rebounding as far as the economy is concerned, but the speed of recovery looks better than it feels. Mark Vitner is a senior economist at Wells Fargo. He joins us now from Charlotte, North Carolina. Welcome.
Hey, good to be with you.
Hey, so I know you're an economist. We were in the commercial break, though, just rapping about the stock market. It seems to have really kind of turned a corner today, and you kind of had an interesting perspective as to why. Will you share it with us?
Well, there's really nothing on the economic front today, but there's some concern about the supply of treasuries that's coming out. Even though we got some better news coming on the size of the budget deficit, it's still $1.6 trillion, and that's got to be weighing on people's psychology a little bit. I think that might be on the market a little bit, so that and also the rally that we've had this time of year, folks might be just looking to book some gains. So
summer doldrums in anticipation for a historically rocky fall. All right, so Mark, your comment, the economy is rebounding, but it looks or feels better than it actually is. Tell me more about what you mean by that.
Well, when the financial crisis hit last fall, we saw both sales and production fall tremendously, but production fell far more than sales, and we drew down inventories. Well, now, even though we haven't seen any improvement in sales, production is now rebounding a bit. And so it gives the impression that the economy is coming back really solidly. We're looking for about 3.5% GDP growth in the third quarter, but final sales aren't growing. The only place they're growing is cash for clunkers or the $8,000 rebate for first-time home buyers. You get away from that, and you don't have a whole lot of demand growth.
All right, Mark, go ahead and cough or clear your throat if you need to while I ask this next question.
I'm good there.
Okay. I know how you feel. Been there myself. Okay, we're going to get a slew of reports this week. Let's talk first about housing. You referenced this. Tomorrow we'll get the Case-Shiller Home Price Index. We know prices have been falling. What are you expecting?
Well, we're either expecting a small increase or a small decline on a sequential basis, but the year-to-year declines are getting smaller, and that's the important thing. We're moving back towards zero. We're probably going to get there in about a year. That's when housing prices should hit a definitive bottom. So
are falling home prices good or bad for the recovering housing market? In some ways, there are actually several ways to look at that, no?
Well, it's a necessary precondition. We have to have housing prices come back down a bit. They actually have to overshoot a bit so that housing becomes affordable again and we bring buyers back into the market. And it's just something that we're going to have to endure. But as long as housing prices are falling and falling by double digits, because we're still down 16, 17% year to year, it's going to make lenders very reluctant to extend mortgage credit. So we need to see housing prices bottom out before we see credit really start to flow again.
Let's talk about consumer confidence. Kathleen Hayes, our economics editor, said this is the one to watch. We've also got spending and income numbers a little later in the week. Survey looking for a slight improvement, but this is still historically weak. This has just been the problem with this economy, the jobs market, consumer confidence, spending. What is going to turn the corner here?
Well, see, this is one of the reports that I think is really going to be telling this week. We're looking for a drop in consumer confidence. The consensus is looking for an increase. And this would be the third consecutive drop after some very hefty increases that we saw earlier in the year. When it comes to consumer confidence, the number one thing consumers want to see is some improvement in the employment conditions. And we're not seeing that. The rebound in economic activity that we're seeing is very technical in nature. We're getting a rebound in the stock market because people don't fear Armageddon anymore, and we're getting a rebound in production to rebuild some inventories, but it's not strong enough for companies to move forward and start hiring people. And until that happens, I think consumer confidence is going to remain in the doldrums. So that could be a little bit of a downer. That comes out tomorrow at 10 o'clock.
All right, so summing it up, Mark, you have Laszlo Barini on Bloomberg News saying he is so optimistic about recovery. And then you had Nouriel Roubini in his editorial saying, oh, we're looking at a double dip recession, a W-shaped, and we probably haven't seen that second dip as of yet. So where do you lean?
Gosh, I hate to say that I'm closer to Roubini, but I don't think it's a double dip back into recession. I do think that we're going to come out of the recession really strong, 3.5% GDP growth in the third quarter, but then slide back to about 1.5% for the next couple of quarters. So it's not quite a W. It's kind of the second bottom's not as low as the first one. So we're not going to go back into recession.
But that's not a letter. We need a letter, Mark.
It's kind of a sloppy W, sort of like if I was writing in cursive. So
still a pretty decent.
But it's close. It's a better environment than the naysayers have out there. It's a solid recovery. It's not unlike the classic economic recovery. Whenever you move from recession to recovery, you always tend to move in fits and starts. and I don't think it'll be that out of the ordinary in that regard.
Mark Vitner, senior economist at Wells Fargo, we thank you for your time. Thank you.
Good to be with you.